Understanding irrecoverable debts. We also call it a bad debt. Let's look at an example. Salar owns a business and sells goods on credit to customers. On 1st of Jan 2022, he has 3 trade receivables. Omar worth 200, Jasil worth 500 and Myrna worth 600. Therefore, at the beginning of the year, as at 1st of Jan 2022, we can conclude that Salar has a total trade receivable value of 1,300, which we call it an opening balance of trade receivables. However, on 31st December 2022, the amount owed by Myrna, which is worth 600, was considered uncollectible. Now, let's find the closing balance of our trade receivable. So, closing trade receivable is 1,300 take away the amount owed by Myrna. Therefore, your closing balance of trade receivable will be worth $700. So, Myrna's balance will be considered as uncollectible. Now let's see how are we going to post entries to the ledgers. You will need 2 ledgers, a trade receivable and an irrecoverable debt ledger. First of all, remember to post the opening entries of trade receivables and irrecoverable debts. Irrecoverable debt is an expense account. And you can see the information in purple. An irrecoverable debt balance is 50 at the beginning of the year. Therefore, you post the entry as 1st of Jan 2022, balance brought down 50 on the debit side of irrecoverable debt account as it's considered as an expense. Whereas, trade receivables were worth 1,300 at the beginning of the financial year. Trade receivables are assets. Therefore, you enter the opening balance on the debit side. As 1st of Jan 2022, balance brought down 1,300. Remember, when you enter opening balances, you enter the beginning of the financial year, followed by balance brought down, followed by the amount. Now you can see in the question, on 31st December 2022, amount owed by Myrna was considered uncollectible. Myrna owes to pay 600, which should be considered as irrecoverable debt. Therefore, how do we post the entries? We debit irrecoverable debt account as at 31st December 2022 and we credit the trade receivable account in order to reduce the value of trade receivables. Therefore, you enter it on the credit side of the trade receivable as the 31st December 2022, followed by opposite account's name and the amount. Whereas in irrecoverable debt account, you enter it on the debit side, 31st 12 2022, opposite account's name is trade receivable, followed by the amount. Now let's see how to balance the ledgers. Remember, trade receivable reflects in the statement of financial position. Therefore, it's important to write carried down, brought down while balancing it. Whereas, irrecoverable debt appears in the income statement under expense. Therefore, while you're balancing it, you transfer the difference to the income statement. Now let's do the balancing. As you can see here, debit side is greater in the trade receivable account, so you write 1,300 in the total. Now you find the difference between 1,300 and 600, which will be 700. 31st 12/22 BAL carried down. Followed by that, you bring it to the debit side, 1st of Jan 2023 BAL brought down 700. Now let's balance the irrecoverable debt account. You can see the debit side is greater. Write it in the total. There isn't any value on the credit side, so 650 take away 0 gives the same answer. 31st/12/2022, you transfer this to the income statement under the section of expenses. Now let's see how this reflects in the statement of financial position as well as the income statement. You can see here, irrecoverable debt 650, which we wrote it as income statement, will appear in the income statement under the section of expenses, whereas the closing balance of trade receivables will appear in the statement of financial position SFP under the section of current assets. Hope now you are clear how to post entries for irrecoverable debts.